As you watch this, a piece of software is calculating how much you could lose. Your pension, your insurance, your savings. If the world breaks tomorrow, it already knows the number. There is no vault. There is no trading floor of shouting traders. The most powerful object in modern finance is a line of code. And the same answer it produces reaches a central bank in Europe, an insurer in Tokyo, and a pension fund in California. They do not compare answers, they share the same brain. And no one has asked what happens the day that brain is wrong for everyone at once. In Node 008, we entered the private infrastructure of perception on the battlefield. Today, we enter the private infrastructure of perception over money itself. Welcome to Node 009. Welcome to BlackRock.
Chapter 1: The Risk Obsession.
BlackRock did not begin with greed. It began with fear. In the second quarter of 1986, a rising star at First Boston, Larry Fink lost approximately $100 million in a single quarter. His team had bet wrong on interest rates, and the models that were supposed to warn him saw nothing. He later described it plainly: "I screwed up, and it was bad." The man who had been on track to run the firm was, instead, quietly pushed out. Most careers end there. Fink built a company on the wound. In 1988, with 7 partners and a $5 million credit line from Blackstone, he founded what would become BlackRock, obsessed with a single question: how do you see the risk that no one else can see? The answer became a system. They called it Aladdin, the asset, liability, debt and derivative investment network. It was not built to make money. It was built to measure danger. The timing was not luck. Fink had watched the mortgage bond market. He helped Pioneer become a machine human could fully track. Thousands of loans bundled, sliced and sold, each with its own hidden risk. Wall Street had built instruments more complex than the tools used to measure them. Aladdin was his answer to that blindness. Not a bet on where markets would go, but an X-ray of what a portfolio actually held, stripped of the stories people told themselves about it. The tool became larger than the firm that made it.
Chapter 2: The Machine.
To understand BlackRock, you must stop looking at the money and start looking at the machine. Today, BlackRock manages more than $14 trillion in assets, the largest pool of capital ever assembled under one roof. But the money is not the machine. The machine is Aladdin. Aladdin is not a spreadsheet. It is a risk engine that runs roughly 180 million calculations every week. Monte Carlo simulations, stress tests, and factor models that project how a portfolio behaves across thousands of possible futures. It monitors more than 2,000 distinct risk factors a day. Its economic scenario simulator can run tens of thousands of portfolio outcomes in seconds. 5,000 engineers and modelers maintain it, and the entire platform now runs in the cloud. Aladdin owns almost none of the hardware that gives it life. That is the honest architecture of this node. The software that measures the risk of the world has no weight of its own. It lives on servers it does not own. The most abstract layer of power, the perception of capital, still rests on a physical substrate. As we said in Node 006, the hardware is the law, but the true power of Aladdin is not its speed, it is its reach. It is used by over 200 institutions, banks, insurers, pension funds, and central banks, overseeing more than $21 trillion. The company does not merely manage the largest fortune on earth. It rents out the eyes, through which much of the rest of the financial world sees its own risk. Roughly a tenth of every stock and bond on the planet is watched through this one lens. Even firms that compete with BlackRock run on BlackRock software, when everyone speaks the same language of risk, leaving the conversation becomes impossible. In practice, when a pension fund and the insurer that reinsures it both run Aladdin, they inherit the same assumptions about what is safe and what is not. Diversity of opinion is the immune system of a market. Aladdin, by its very success, thins that diversity.
Chapter 3: The Monoculture and the Unelected.
Here the note turns from engineering into a question Regulator has answered. If over 200 institutions see risk through the same model, they can receive the same signal on the same day. The tool built to reduce the risk of each firm may quietly amplify the risk of the entire system. When the model says sell, there may be no one left to buy. Regulators have a name for this fear: monoculture. It is not a prophecy of collapse. It is a structural vulnerability, a single point of failure not in a machine, but in a way of seeing. But a shared way of seeing is only the first half of the power. The second is the right to act on it, the vote. Through its index funds, BlackRock holds shares in almost every major public company on Earth. Together with Vanguard and State Street, the Big Three, it casts roughly a quarter of all the votes at shareholder meetings across the United States. The three of them are the largest single shareholder in over 80% of the companies in the S&P 500. In recent years, BlackRock has begun handing some of that voting power back, letting certain clients direct their own shares. But the lens through which the risk is measured remains its own. And it is not simply one of three equals. Vanguard and State Street hold the shares. BlackRock holds the shares and the operating system that measures what those shares are worth. It is the only one of the three that both owns the vote and rents out the lens. And here is the discipline this archive demands. BlackRock does not own that money. It is a fiduciary, a custodian. The assets belong to teachers, retirees, and savers whose pensions flow into its funds. BlackRock votes with shares. It does not own, on behalf of millions who never cast a ballot. No one elected these electors, and yet, in the boardrooms where the future is decided, they hold the deciding hand. This is Palantir's ontology from Node 008. Rebuilt for money, a system so embedded that seeing through it and voting through it becomes the same act.
Chapter 4: Owning the Physical World.
For most of its history, BlackRock owned paper, shares, bonds, promises. Then it began to buy the world itself. In a wave of acquisitions across 2024 and 2025, it purchased Global Infrastructure Partners, HPS Investment Partners, and the data firm Kraken, pushing its private market assets past $300 billion. This was not diversification, it was a migration from watching capital to owning the physical arteries through which capital moves: airports, ports, pipelines, power plants, and data centers. And with Kraken folded into Aladdin, the machine now sees the private markets too. The lens that watched the public world has been extended into the shadows where the public cannot look. The logic is deliberate. Public companies are visible. Private assets are opaque by design. BlackRock is expanding into the corners of the economy regulators see least clearly, moving risk off the public ledger and onto Aladdin's. Recall Node 006, the 10 gigawatt cathedrals of compute, the Stargate scale of energy and silicon. Someone has to own the power plants and the data centers that make that computation physically possible. Increasingly, that someone is BlackRock. The firm that measures the risk of the world is now buying the ground the world runs on.
Chapter 5: The Sovereign of Capital.
We arrive at the question this node was built to ask: who governs the governor? In 2008, and again in 2020, when the financial system convulsed, the United States government did not turn to a public agency to manage the wreckage. It hired a private company, BlackRock, to buy and manage assets on behalf of the state. The referee and the player wore the same jersey. The firm that seized the market was asked to steady it. No one accused BlackRock of wrongdoing. That is the point. It was chosen because it was the only entity with the tools and knowledge to do the job. The very definition of an institution, too essential to regulate. You cannot discipline the firm you depend on to manage the emergency. Dependence and oversight cannot occupy the same hand. A pattern now closes across this archive. In Node 007, a single private company came to govern the orbit. In Node 008, a single private company came to govern military perception. In Node 009, a single private company has come to govern the perception of capital itself. Free sovereigns, none of them elected, each holding an infrastructure no government can quickly replace. There is no framework for this. BlackRock is not a bank. It takes no deposits. It is not a state. It holds no territory. It is something the old maps of power cannot name. A private entity operating at sovereign scale, answerable not to voters, but to the market that values its sight. Other mechanisms can disconnect you from money, cut the wire, freeze the account. BlackRock does something quieter and deeper. It decides which enterprise receives the oxygen to grow, and through which lens the danger is measured. And that is the true weight of this node. There is no kill switch to pull. Because the day that brain is wrong, the error will already be inside everyone's head. The same mistake, seen the same way, at the same moment, by a tenth of the financial world. The state calls it in a crisis, but capital is still an abstraction. It only has value if something real stands behind it. There is a substance that still turns the wheel of civilization, drawn from a single kingdom, now converting crude oil into computation. The next node does not manage money. It manages the energy that gives money its meaning. BlackRock showed us who owns the board. The next node will show us what fuels it. This has been a Silicon Node Intelligence briefing. Follow the money, follow the nodes. If you value this level of industrial intelligence and want to stay ahead of the disruptive trends shaping the 21st century and beyond, join us.
We are Silicon Node Reports, and this was BlackRock, the operating system of money. Who owns the board? Subscribe to Silicon Node Reports. Let's decode the future of the world's most critical supply chains together. Silicon Node Reports, the infrastructure of global capital.